Why do you need a bank? What's the purpose of a bank? A lot of people would tell you our entire economic system needs banks. And actually, if you go back to the Great Depression, when that happened in the 1930s, one of the first things that FDR's New Deal, actually the first thing that FDR's New Deal did was fix the banking system before they did anything else. You had people that needed food, you had people that needed jobs. For anything else, they fixed the banking system. Now, why is that? Well, when you're talking about the economy itself, the banking system is the heart of that. It's the heartbeat of the entire economy. It's how you and I get money. It's how businesses get money. It's how the money is distributed. Everything is basically based off of the different financial services that banks can offer. So when you think of a bank, when you and I think of a bank for our reasons, usually it starts with a savings account or a checking account, that I need someplace to put my money where it'll be safe. And so we tend to think of that as a savings account. So, okay, that's not necessarily the reason the bank wants your money. They're not there to smile, put it in a safe, and say, there you go, it's safe now. That's what you and I need, but that's not necessarily what the banks are doing. What the banks need is they want you to put your money in their bank in a savings account, because then that allows them to loan that money out to other people. And then, of course, what happens, again, the benefit of a savings account, is by putting my money into a bank in a savings account, I'm allowing the bank to use my money. And they're going to make money off of that. They're going to loan it out. It'll be paid back with interest. So the bank makes money. Well, since I did that and I put it in the savings account, they're going to kick me some of that interest too. So the longer I keep my money in the bank in a savings account, the more money, the more it's going to grow. Just sitting there, it's going to grow. Same thing with checking accounts, depending on the bank that you use and depending on what they offer. I have a checking account with my bank, and so I put money in there that I can access when I go to the store and to pay bills with. So the more money in my bank, and a lot of banks do this, the more money that I have consistently in my checking account, they'll kick me some interest. Because again, that's money that's in their system that allows them to technically have access to. So now if you're saying, so my money's not really there, it is. Now the catch is, if everybody that had a savings account in my bank, in my town, all went to the bank at the same time and said, I want my savings, give me my cash, probably the bank does not have it. And the reason the bank doesn't have it, it's loaned out. So, but that would be called a run on banks. That doesn't happen anymore. Now the reason that doesn't happen anymore is when you put your money in the bank like that, checking or savings account, there is something now, because of the Great Depression, called the FDIC. That is the Federal Deposit Insurance Corporation. And what that does is that insures your bank account. In today's world, it insures your bank account up to $250,000. So if the bank would fold, you still have your money. And by the way, if you have more than $250,000, then open up more than one savings account in different banks and have yourself covered. That's a little side note there. Now, other things you can get from a bank, other different things. Investments. You can have a CD. That's called a certificate of deposit. So in other words, now there's a catch to this. A certificate deposit is over a set amount of time. So if I buy an 18-month CD, and usually you have to have a certain amount up front. So if I say, okay, how much is an 18-month CD right now? What's the interest rate? It's not the interest I'll pay, it's the interest I'll get. And so if they say, well, right now, an 18-month CD, that's about 3% interest is what you'll get back. And I say, all right, how much do I need? $1,000. Now, I'm going to hand the bank $1,000. I cannot touch it for 18 months. It's not where I can go in next week and say, hey, I need some of that $1,000. Nope. A CD is locked. So I gave them the $1,000 for 18 months, and the promise is I'm getting 3% back. So when I get my money back, I can't touch it. But when I get my money back, I get 3% interest. So that's how that works with a CD. That's a certificate of deposit. I'm still depositing, I'm just not touching. And that guarantees them that that money will be there for 18 months. So there's CD. There's also services. There's direct deposit. My checks from my employer are directly deposited with my bank. I do not take my check by hand. I used to. I don't take my check by hand to my bank anymore, and then we do all the paperwork, and then they put it in my account. It is directly deposited. Now that's where your employer has to work with your bank as well, has to be able to do that. So it's electronically transferred. Matter of fact, where we are in time right now, tomorrow I get paid. and I already know how much I get paid, and tomorrow it's going to be there tomorrow morning when I wake up. It is directly deposited into my account. I don't have to do anything. So that's a service. And that, I tell you, I said that I used to actually take the checks in, that's a nice thing. Once we started actually having it just directly deposited, that's all right. Now, obviously that means you have online banking. You have online banking, you have debit cards. A debit card takes money out of your checking account. You can set that up that every time I use my debit card, it looks like a credit card, but it's coming out of my checking account. So I don't need to carry a checkbook anymore and write individual checks. I have a debit card, again, a bank service, a financial service that they offer. And then when you look at the types of loans that if I need money from the bank, well, it can be anything from a car loan to a student loan to a home loan, that's called a mortgage, to a small business loan. All of that would be a service that the bank can offer. And so really when you think about the heartbeat, and hopefully it makes sense now, that our economic system runs off of what banks are able to provide, both taking money in and helping you that way by, thank you for putting your money here, we'll give you some interest for that, to, oh, you need to buy a house, well, let us help you with that. And so really when you're looking at the financial services that banks provide, it really is the pulse and what the force that drives our economy in the United States. We'll see you next time.